Well, time check, and it's the first 365 days of President John Dramani Mahama's second stanza. Last year, at the beginning of the year, we were here to do a similar analysis. We now have the full results for 2025. We have the scorecard. We also look at 2026 this year. What is the hurdle ahead? And in terms of President John Dramani Mahama's first year, what is the positive that we are carrying forward? How do we sustain the gains? And how do we even, sort of smoothen out the bleaks that we saw in 2025? So, of course, Winston, Tackie is here in the studio with me on the smart wall for this analysis, and Caleb Ziblim always is also here. And gentlemen, what a beautiful way to actually start the year. We have done behind the scenes extensive analysis on how the economy has fared. We've had a number of scorecards on governance, politics, so many other things. But in terms of the economy, the only better place to do this is actually on Beyond the Numbers, because here we'll give you the data, we'll tell you the stories also behind the numbers. And that's simply what we are going to do today. And in fact, you cannot talk about the Ghanaian economy without starting with the exchange rate situation. This was where we were at the beginning of President John Dramani Mahama's, second stanza. And the dollar to the cedi was around 14 cedis, 70 pesos. And if you really want to understand how important exchange rate is in the scheme of affairs as far as the stochastic process of our economy is concerned, today, as we speak, the Asantehene himself made his way to the Bank of Ghana, where he sat in a policy room with the governor and his entourage. And most of the things they were talking about in terms of how we can move forward was about the exchange rate. How did the exchange rate situation perform, Caleb, in 2025, and how do we even carry forward 2026?
Well, 2025 has been an outlier. I said it because since we started tracking in 1994, we've never ended the year with the cedi being stronger. It's never happened before. And then 2025, that happened. The cedi ended, I think, about 40% stronger than the year before. And the previous year, that was 2024, we depreciated by about 19.2% or almost 20%. So after depreciating by 20% in 2024, in 2025, we appreciated by 40%. And again, that's the first time this has happened in the history of the Ghanaian cedi.
Yeah.
So that's good news. And then we started the year at 14 cedis, 70 pesos. It dropped. It stabilized around 15 cedis for the first 3 months of the year in 2025. Then that's where we saw the nosedive from 15, went all the way down to 10 cedis, 20 pesos or so. It stayed there again, and then since then some volatility. But then, interestingly, it's stayed between President Mahama's band. That was between the 10 and 12 cedis. 10 and 12, yeah. So for the past few months, since it dropped from about 15 cedis, we've not really seen the official BOG rates cross 12 cedi for that long. It has not reached 13, but then usually 10, 11, if it goes up, 12. And then currently we are at 10.6. In fact, we ended 2024 at 10.4. So we started 2025 at 14 cedis, 70 pesos, and we ended 2025 at 10 cedis, 40 pesos. But we're currently at 10 cedis, 60 pesos. And the projections are, we'll get to the projections very soon, but the projections are we can sustain this for at least the medium term. So on the exchange rate front, we are seeing positive news.
Winston, what was the magic? Exchange rates?
I think it's been a mixture of several factors from how the economy performed in 2024 before we got into 2025. Before elections, that was a key election campaign promises that will stabilize the cedi. There were high hopes by the previous government before they came into government, that is the current government. And there were challenges, especially with policy direction, how the economy was moving. If you look at some of the reviews before we come into 2025, it appeared, we did an analysis of the fact that the exchange rate was quite high as of then, and certain factors that the central bank had to intervene consistently where they touted to go for oil. We saw the DDEP coming to light, and all those factors and payment of our debt and arrears were key consideration, because we're analyzing that if our exchange rate was weak, that means our debt structure kept blossoming by the then. So it became a key conversation then. How are we going to manage our exchange rate? If our exchange rate was bad, our debt or independent power producers was going to go high. And so all the fundamental of the exchange rate conversation was critical to ensure that our economy was looking good for not just domestic, but external investors, external businesses. Businesses domestically began leaving the economy because they understood that any time repatriation conversation comes to light, they tend to not make much more than they were before. So the ease of doing business and the investor confidence was dwindling then. But it appeared that if you look at the trend of appreciation in 2025, it's been amazing. From policy direction from the central bank, from the onset, the central bank announced strategies and frameworks that they intend to go by. And if you follow month by month, you realize that that strategy has been what the governor has been working with in collaboration with the Ministry of Finance until when the institution of gold board came into play. That is strengthening our reserves. The reserve position is critical to ensure our trade balance and deficit are in good standing. And that has been what we've been experiencing in 2025. That gave leverage because if you look at our analysis that we did in the latter part of December in 2024, we were quite anxious about our debt burden in 2025, how government will be able to fulfill our debt obligations. But it appeared that amidst that debt fulfillment obligations, under the IMF, under the tariff adjustment, under the DDEP, and most of those hurdles that we were quite anxious that any government that comes to power will have a very serious tax at hand. But it appeared the strategy by the governor, in conjunction with the finance minister, including the prudent management of the economy that we've seen so far, tells you, I was reading the IMF report and you could tell that every target benchmark that have been set, we've met them, surpassed them, and over the years, including the inflation figure that was released today, tells you that it's been a long time. Ghana's economy have experienced this relief, and that is good not just for Ghana, but to our investors who may be looking to Ghana. Comparing to our sub-Saharan African countries, Ghana is in a positive outlook.
40.6% appreciation. Was it really expected? Did it really overdo ourselves in terms of where we are at the moment? And this figure may look very, very, positive, but it can also be a very big risk factor. If you look at the fact that you are up 40.6%, it means that if you should start coming down, people will look at it and refer you to where you were before, and there will be pressure on government to maybe find ways and means to get back to that, appreciation level. But the president has said that, well, give or take, in a fiscal year, even if they're expecting depreciation, it should be around, I think, 5% he mentioned, right, depreciation rate. And we know that the exchange rate situation is a baseline for almost everything. Yeah. It's a baseline for how our energy sector will perform, because if you have the light on, it depends significantly on exchange rate. If the exchange rate is bad, ECG will find it difficult to pay independent power producers. Yeah. They will put up the light. The exchange rate is also a big determinant at the port. We know how import dependent we are as a country. And so if your exchange rate is stable and it appreciates, or even if it depreciates, it is really going to affect how goods coming in from the port come into your economy, to affect the inflation rate as well. In terms of even having the confidence to come and cut monetary policy rate, significant component of that depends also on the exchange rate situation, and even how you look in terms of your international outlook in a certain fiscal year also depends on exchange rate. My question is, 40.6%, did we overdo ourselves?
Well, I think, so this 40%, I don't think we're going to see again. Because if you look at the band the central bank is operating with, 10 and 12, it means that they don't want it to go below 10. And when you're starting the year at 10.4, 10.6, it means that if you want to see another 40% appreciation, you have to go back to around 8 cedis to $1, yeah, which is not going to happen. So I think
it will actually be less than 8%. 8
exactly,
cedis, right?
Which is not going to happen.
Yeah.
It will bleed our exports and all of that. So I think 2025, like I said earlier, is an outlier, and it's a good outlier because the history of the entire city, we've not seen an appreciation. So this is good for the economy. But then expecting another 40% appreciation being sustained and moving forward, that's unrealistic. But then the issue is about stability, keeping the exchange rate very stable. Some people say the 10 to 12 is in a very wide band. Some prefer 10 to 11, 10 to 10.5. But then keeping it stable, it means we're not going to see this 40% appreciation anymore. We should see some depreciation because it's expected. If you want to grow an industrial base, you need to have a competitive currency to be able to export your goods and get more foreign exchange. But the question comes to how do we get this 40.6? The answer is gold. It's very basic because gold prices are all-time highs, above $4,400 per ounce. Last 2 years, we're doing about $2,000 per ounce. So double your gold export receipts from even the same quantity of gold. Also, because the centralized nature of the gold board and all of that, the BOG has access to all those foreign currency and then intermediate the bank in the markets as and when. So this is why we saw the 40% appreciation in the currency.
Yeah.
Now, is it sustainable? Depends on how good you're going to do on the international market.
I mean, there's an important point you made. There was a big, warning from the IMF. You look at the IMF program, for instance, it is clear that currently, if you look at the risk analysis they did, the Gold Board Initiative and the fact that there's a country that is relying heavily on the health of how the gold perform on the international side, they were very categorical and explicit and said that if you begin to see the gold prices deteriorate or coming down, you should be rest assured that this is going to hit the Ghanaian economy
very hard.
In a very hard way.
It could send us to another crisis.
Absolutely. It's likely to send us to another crisis, especially if you look at these two figures you see on the big wall, because I was expecting, Winston, that once you are seeing your currency going up by some 40% appreciation, then we should have, possibly at this point in time, have about 6.5 or 7 months
or a year
of import cover. But we are still around 4.8 compared to 4.1 that the government actually inherited. Does that mean that if we decide to, like Professor Bokwin will say, we are too fixated on exchange rate, if it begins to leave the currency to perform on its own, market forces to determine the rate and not BOG coming in so much, do you think that the BOG this year can say that, well, we have raised the CD to a level about 40.6%, now let's allow it to float naturally? How do we build reserves that will give us that kind of, cushion when gold prices maybe begin to go down in 2026 this year?
I believe I always say, make hay while the sun shines. This is a critical time for Ghana's economy. If you read the IMF report and you've studied several documents on Ghana's economy in 2025, just as you mentioned, the gold is a key conversation there. And if you look at Ghana's budget structure, predominantly, anytime commodity prices fluctuate, we are hard hit, especially when it goes down. From cocoa, gold, aluminium, all the key commodities that we export. And it appears that consistently, especially when cocoa prices was down, it affected us. When crude oil prices went down, it affected us. And these are elements that hold our economy. If you look at previous years, our non-oil GDP basically was holding the economy until recently when non-oil GDP started performing great. And therefore, if the target in the 2026 budget is to strengthen the non-oil GDP, we're hoping that we'll see it reflect in the economy, where services and key structures, financial sector, are witnessing that growth. And this growth are reflective of the standard of living of individuals or citizens in the economy and households. But for the central bank to say they can do this, there was the conversation that was had yesterday when I saw a picture of the Gold Board CEO meeting with the World Gold Council, and I chanced on the statement that there are discussions to ensure there is a processing plant into process. That's processing plant for gold refinery in Ghana. Yes, the central bank, the Gold Board have that mandate, including the Minerals Commission, basically. And we are hoping if this should come into light at this point in time where Ghana is making so much from gold, refinery comes into play, gold commercialization becomes a key conversation. We are able to build our reserves with that benefit because refined gold gives you more value than just selling the unprocessed gold. And so this is high time for us to capitalize on this. If we miss this chance and the global outlook right now, Venezuela case is moving people to move their savings into safe haven. Gold is not the key thing. Just between this week, we've seen gold price increase astronomically. Aluminum prices are increasing. All these are critical. If we don't chance on this based on policy direction, we just heard yesterday the governor also cited that there is the need to review the gold board because it's now like a key agency, that is a strategy by the central bank.
Strategic, institution at the moment, not just for profit, right?
Not just for profit. Yeah. And if the central bank doesn't take opportunity to ensure that we formalize domestic, non-artisanal gold mining operations in Ghana, it will, in the long run, affect our output, including our reserves and including our strategy. So for government to ensure they can have these enough 4 months of import cover in terms of trade and surpluses, there is the need to consolidate these gains by ensuring the workable strategies are enforced.
Look at all the beautiful flowers we've seen in terms of the economic outlook last year. Yeah. Do you think that we deserve such a garden of 4.8 months of import cover?
A garden,
I think, well, my view is that we should have at least even a year of import cover because import cover is mainly about the confidence we sell to the market. And also because the entire economy at the moment, unfortunately, is on the back of gold. Yeah. And fortunately for us, the gold prices in the short term will remain elevated, particularly because of who is in charge of the U.S., Donald Trump. His abduction of the Venezuelan president recently has reduced oil prices and even increased gold prices again. So all these factors on the international markets are very good for Ghana. So in the short term, the next 2-3 years, possibly, depending on how Donald Trump operates, Ghana is going to be a very good position. So I can understand why the central bank was not focusing too much on parliamentary reserves. But then again, this is an international market. It's geopolitics. It's a very fluid situation. Yeah. Right now, Donald Trump has set his eyes on Greenland. If he decides to take the island country and then the EU decides to retaliate, we don't know how that's going to leave Ghana.
Can you even retaliate?
Can you even? And some international relations experts say that once Donald Trump takes over EU, if that happens, and EU, we know they cannot retaliate against the US, they might set their eyes on African countries to try and bully their way around things. So the whole situation is very fluid. Yeah. So my opinion was that even though in the short term gold price remain elevated and we'll still benefit greatly from that, and also because of how Donald Trump is operating, the external environment is going to be very favorable for Ghana. I was thinking that we focus more on building, like Winston said, consolidating the gains. Build more reserves, focus more on industrial manufacturing, more gold processing, all of that. Because once we leave this high period of high gold prices, we're going to be left very vulnerable. The same way we left the international capital market, when we didn't have access to about $3 billion every year and euro bonds to support the currency. If gold prices tank, we'll not have anything to rely on again. And then once that happens, and that crisis, and we'll go back to the IMF. So it's just
I think I want to add to what Caleb said, and especially the risks is explained well enough, the geopolitical risks. If you look at the African risks, basically, the tension in the Sahel actually poses a huge risk for us as a nation. Burkina Faso, Benin, all those tensions there, it's likely to, if we don't put our strategy in order, it's likely to destabilize our northern sector of the economy because Burkina Faso, the tension is still there. And if we don't manage it well enough and it trickles down, including the ISIS situation, including how we can manage our resources in the north, if we are not careful, it could destabilize all the numbers because how can you have a good green economy when peace is at risk? I always say peace is a very expensive commodity. If you have it, you protect it. And it's high time that our borders are secure in terms of smuggling, protect all the commodities export. We know how much is going, how much is coming. And Gold Board is dealing with the case of gold. Cocoa Board is dealing with the case of cocoa. We must ensure every commodity, the grains ban that was instituted in 2024 ending. I hope they can kind of remove it so that the bulk harvest the farmers are having can be exported because that is the case now. Because there are just so much domestic production, but the market access is now a key challenge. Government should focus on that and ensure that as much as we have more, there are other avenues to sell them. So the conversation should be broadened beyond the scope of not just building our domestic economy, but expanding our market reach to several African countries so that our economy will have leverages based on trade.
Mahama inherited an inflation rate of 23.8%. He's taken it down to 5.4%. in fact, 12 months of consecutive decline, or if you like, tanking in inflation. And this figure you see on the smart wall, I want to ask, is it realistic?
Well, I mean, it's the lowest since 2002. That's a long time. It's the lowest inflation we have seen since 2002. So, I mean, the question is there, the question again?
Yeah, is it realistic?
Is it realistic?
Yeah, magic finger.
Do you think that I mean, many are questioning this figure, especially if you really understand how the CPI is calculated. You understand why we might have 5.4% in terms of inflation and prices are still very, very elevated. Right?
Yeah, but I mean, even to get a 5.4% inflation, it means that price of goods should have fallen. So in the basket, there should be a deflation. Because you cannot get this very low without some prices reducing to pull the entire basket down to about 5.4%. And then we've seen prices reduce. Transport fares reduced at a point. If you go to the market, some of the price of the farm products have actually reduced. So that's understandable. But then when people are talking about not seeing or not feeling the impact of a very low inflation rate, I understand. Because once people see 5.4% inflation rate, they expect that prices are going to go down. Sometimes the miscommunication and the understanding of how these things work results in poor understanding of the policies. So price of goods and services are not going to go down. But then this 5.4% means that they're going to be relatively stable over a long time. And in fact, we are now below the central bank's bench because the central bank has a bench of 6 to 8%. We are below 6%, 5.4. So this actually means that the central bank should actively work...
say 6 to 10%, right?
Yes, 6 to 10%. So the central bank should actually be working to increase the inflation rate because they set a band of 6 to 10%. And the kind of economy Ghana runs, they decided to set 6 to 10% because once it's below 6%, there's going to be negative effects for the economy. The US has about 2% target for inflation. So once it's below 2%, the central bank has to step in. Exactly.
Quantitative easing and all of that.
Yeah, so I expect the central bank, once they have their first monetary policy meeting, to carry risk significantly. Because once you carry risk, you're putting more money into the economy. Once there's more money in the economy, the inflation rate goes up again within the central bank's band of 6 to 10%.
Now, there are a lot of people, when they see the inflation numbers, they're thinking about prices, but I don't think prices at all. My thinking about inflation numbers is different. And this is where it lies, and you made mention of it, is the policy rates and the cost of borrowing, right? Because I feel that inflation is a big indicator for what happens here, right?
And your treasury bill market
exactly. Well. All of those things are dependent on inflation, and Caleb mentioned rate cuts. Last year, we saw about 1,000 basis points cumulatively in terms of rate cuts. This year, inflation is still tanking. Do we have what it takes to continue to cut rate to about 10%, or maybe I don't think 10% is too high, right?
But it can go to 10%. It can go to 10%.
Well, in the long run, can we cut rates to a level where it reflects the inflation rate?
And before Winston comes in, also cut it to a point where the average lending rate also matches the policy rate.
And also, in as much as it's interesting, we always say, let's cut the lending rate. Let's also understand that the financial system also relies on the rate, basically, to survive. So there should be a point, a benchmark, agreement. So this is where the central bank must agree with the financial sector place. And I like the new direction of the central bank, where they meet with the CEOs of the various banks before, as part of the discussions, before the announcement of the rate, taking into consideration various perspectives. And I think if they should go further, it should be within a reasonable band, just with the objection that SMEs are supported, businesses are supported. Also, the banks do not fall out if you look at the structures going forward. And the reduction of MPL, which the central bank last year released some instructions that there's now a benchmark of how much of MPLs you can
be in the system,
should be in the system. You can't go below and above certain threshold. And that is very important, because if you look at previous data, it tells you that some banks intentionally, I'm alleging basically, intentionally go above the LPOs. They know that once they recorded, it will just be in numbers, but there's not been much motivation on that. And that is something that the central bank is trying to control. And this rate, if they should go down, I hope it will help the smaller, middle-scale enterprises, businesses. There will be access to capital for financing critical projects. The main objection is the 24-hour economy, how businesses will be plugged into all these factors that we're seeing looking good, and how it will translate into revenue generation, job creation, and all the various elements that will ensure a fruitful and successful economy.
But Caleb, sometimes when I see these differences, inflation, 5.4%, look at where the policy rate is.
Your treasury rates are around 10%.
Exactly, and you have the average lending rate also being above, 19%, or I think it's within 19 and 22% or so, right? If you look at this, the differences, the variances between these two numbers, and I mean, you can say three numbers, do you think that we have reached a saturation point in terms of where the inflation should be? Because you talked about the Bank of Ghana should now start working to bring it up. That would mean that you should cut the policy rate. Can our banks take a lower lending rate, looking at the fact that they are already, under some level of distress from the DDEP that was carried out?
Well, I think now we are moving to the effects policies have on the economy.
Yeah.
Because once you want people, and people keep saying that we see numbers, but we don't feel it. Our situation is almost the same as last year. But then once if you want to feel these things, that's where we have to go to the banks. The banks need to reduce their lending rates, because once you start from the policy rates, the banks should reduce the lending rates.
Yeah.
Reduce the lending rates, businesses can get access to cheaper credits, employ more people, produce more, and it's a cycle. But then it doesn't
and bring alive the 24-hour economy.
So it doesn't just stop with the central bank. It has to start from the economy. And that's how people in the economy can now feel the effects. So I think, yes, banks should be able to take the hit, because that's why you're a bank. Bank because being a bank doesn't mean you go and leave your money with the central bank, or you go and buy treasury bills, leave the money there, and then get...
Many say that's lazy banking.
Exactly, because the main point of banking, and in other parts of the world, the interest rates on government treasuries and the central banks is very minimal, which is why citizens in other countries can get access to cheaper loans. Because once you cannot leave your money with the central bank or with the central government, you have to give money to people.
Yeah.
And this is where you ramp up your efforts on trying to make sure that you know exactly who you are giving the money to, whether the person will be able to pay back, do more due diligence and all of that.
And even at this point, governments say that, well, I don't want your money. I don't want your money.
Even with treasury bills, once it started, once the new government came in and treasury bills dropped from the highs of 20 to about 11%.
Yeah, it was actually 31%.
Yeah. No, I was thinking it's not going to be sustainable, because this happened in the past where it dropped significantly from the 20s to about 15s, and then people held back. And then the central bank, the government again increased the rates. So I was thinking that once the government wasn't meeting the targets earlier this year, they would fold and then increase the rates again, but they didn't. Very prudent management.
Yeah. Winston, are we likely to see the central bank, floating or issuing more bonds this year?
I foresee, because there's this tendency for the central bank to enter into the open market, basically the financial market, and that is very interesting. We want to see the development going forward. As much as that, we're hoping that the public debt also will become a key conversation, including the sustainability of the energy sector.
Drop you see there.
Yes, and all these are elements we'll be tracking over the years. As you mentioned earlier, how are we going to mark the performance in 2026?
Now let's mark. I think we've looked at almost all the key indicators, right? So if you look at the first year of John Dramani Mahama, over 100, 0 to 100, what will be your score for John Dramani Mahama in terms of the economy alone?
In terms of the economy alone, I'll give 70%.
70%?
Yes, 70%.
I think my number will have to come with a bit of background.
Okay.
So I think mainly because of how the external markets has done well, Ghana is benefiting. And also you can't take away the fact of now the new coordination we are seeing with the central government and the Bank of Ghana. Because when you see that there's a massive drop in the price of the cedi, when it went to 10.4, central government decided to take advantage of that and go and pay off some debt early on. So you can see some level of coordination there.
Yeah.
So from the external side, very favorable, and then some prudence here. And
what's your score?
I'll say I'll remain around 70-80% also.
70-80%.
Yeah.
I think I'll also be in the same, the same range.
Yeah.
But I will score this government 80% when it comes to the economy.
But I think we are still very vulnerable.
Still very vulnerable.
It will be tested in 2026.
Absolutely. Yeah. This has been Beyond the Numbers with me, Agyei, Kofi, and I did this with
Winston, Tackie,
and
Caleb Ziblim.
See you on Friday, 5:30.